Hello, investors and traders out there. It is a big day in the markets. The S&P 500 is collapsing. We just hit the lowest levels that we have seen going back all the way to September of 2017. Share prices are collapsing left and right. Now, the initial move was to the upside. As you guys know, whenever big news is released in the stock market, there are computer algorithms and fake outs left and right. So the initial move was to the upside before we saw the stock market reverse. It began to sell off. We saw another pump to the upside to the 257 area in the S&P 500 before we saw huge selling, and the S&P 500 was actually down over 2%. The NASDAQ is currently down 2.42%. Individual stocks, names like Apple, are currently down over 3%. The NASDAQ has gone pummeled. Now, why are the markets selling off left and right? We can see Apple is down 3.15%. The IWM is down close to 2%. So across the board, we are continuing to see selling pressure in the markets. This is the direct result of the Federal Reserve's intervention in the markets. As we've been discussing in most recent videos, we've been focusing on this idea of rising interest rates. This is a chart of the federal funds rate. We can see it continues to drift higher and higher and higher. As you guys know, the Federal Reserve uses interest rates as a tool in order to control and to combat inflation. When they believe too much money is floating around the economy, they begin to hike interest rates. Well, the Federal Reserve thinks that there is too much money floating around in the economy, and so they are on the path of hiking interest rates. Now, why is this bad for the stock market? Well, what's underpinned the gigantic bull run we've seen in the stock market over the last 10 years has been record low interest rates, near zero interest rates. And so now that the Federal Reserve is hiking them, this is worrying Wall Street. Wall Street is throwing a temper tantrum. Now, as interest rates tick higher, not only do consumers have to pay out more money, shell out more money for things like home ownership, but we also have to think about large corporations. When they borrow money, they have to pay more. And so as interest rates tick higher, this directly affects the overall economy. This slows down economic growth, and this is a concern across Wall Street in general. And so here is a picture of two men who are at war: the head of the Federal Open Market Committee, Jeremy Powell, as well as United States President Donald Trump. Federal Chairman Powell's job may be one of the most difficult on the planet, increasing borrowing costs for corporations, consumers, and government. It may have been a whole lot easier to keep on suppressing borrowing costs like Ben Bernanke and Janet Yellen before him. Can Powell continue raising short-term interest rates as well as reducing bonds on the Federal Reserve's balance sheet without eventually sparking a similar crisis to 2008? This is a big question that is on investors' mind. In spite of the risk to the financial assets, Chairman Powell has yet to throw in the towel completely. Current market volatility may be enough to inspire the communication of data-dependent pausing, but it's unlikely to bring a shift from tightening to direct easing. A pause and or a sharp slowdown in rate hike activity is likely to become a neutral plateau. During the neutral rate policy phase, stocks may not fully capitulate on the downside. In the same vein, riskier assets may struggle to recapture previous glory in the presence of a wishy-washy Fed. Until Powell throws in the towel in a decisive manner with the promise of more stimulus, zero rate policy, negative rate policy, quantitative easing, then riskier assets will trade like riskier assets, and that may require dry powder cash for an opportunity to take on more S&P 500 exposure at even lower prices. And so the Fed has been very wishy-washy, and Donald Trump himself has come out criticizing the Fed. Let's take a look at some of his comments. President Donald Trump stated, criticizing the Fed, that he disagreed with the Federal Reserve's decision to raise interest rates, and he said the Fed should do what's good for the country. Another statement by Donald Trump, he stated that he is not thrilled with the Fed chair Jeremy Powell for raising rates. Asked whether the Fed should be more accommodating, he said, "I should be given some help by the Fed." The president said he would criticize the Fed if it continues to raise rates. Another comment by Trump stated, "I'm paying interest at a high rate because of our Fed, and I'd like our Fed to not be so aggressive because I think they're making a big mistake." In the final comment criticizing the Federal Reserve, Trump has called the Fed crazy, loco, ridiculous, and too cute, while saying its rate increases are too aggressive and a big mistake. So we can see from President Donald Trump's criticisms of the Federal Reserve that he is very unhappy with the Federal Reserve hiking interest rates. He believes that economic tightening is not the way to go. President Donald Trump prides himself on economic expansion, and as the Federal Reserve hike interest rates, they are undoing that economic expansion that Donald Trump has been pushing so hard for. And so the big news causing the stock market to crater today, the Federal Reserve moved forward raising interest rates for the fourth time this year. The Fed increased the target range for its benchmark interest rate by 25 basis points to a new band of 2.25% to 2.5%, putting the Fed funds rate at its highest level since the spring of 2008. All 10 voting members of the Federal Open Market Committee voted in favor of Wednesday's decision. In its statement, the Fed pointed to a labor market that has continued to strengthen and economic activity that is rising at a strong rate. The Fed did note the slowdown in private investment seen over the last several months, saying business fixed investment has moderated from its rapid pace earlier in the year. So for all those out there who say interest rates don't matter for the market, yes, they do. You can see very clearly from the market's reaction that the market is throwing a temper tantrum. Wall Street is unhappy, very unhappy with this rising interest rate environment that we are in. This is going to slow down the economy. I would absolutely love to know what you guys think about all this. Should the Federal Reserve continue on its path of hiking interest rates? Is Donald Trump right in his criticism of the Federal Reserve? Are they getting things wrong, or should interest rates continue to tick higher? Can the economy, the very strong economy, handle interest rates drifting higher and higher? I would absolutely love to know all your guys' thoughts in the comments. Be sure to drop a comment and let me know what you guys think about interest rates. Where are we headed from here? As always, guys, I appreciate you tuning in. I will catch you in the next video. Thank you so much for watching.